Hey guys, welcome back. You're still tuned into Power Breakfast, and like we've been talking about all through the show so far, it is going to be all about TCS because it's really kick-started the earnings season. So Rima is joining us with the fine print and to really break down all of the earnings. Rima.
Thanks so much for that. It's a pretty good showing from TCS this time, not as bad as what the markets were fearing. The company's reported a dollar revenue growth of 2.9%, constant currency revenue growth of 2.2%. This is better than what the street was anticipating. Margin improvement at 50 basis points is a bit muted. Margins have come in at 24.5%, but the management is confident about margins improving to 25% by Q4. Profits slightly lower than what the street was anticipating on the back of lower other income. The other few important internals. Deal wins steady, $7.8 billion, lower than the prior quarter within the company's guided band. Attrition has fallen by 20 basis points on the last 12 months basis. This is after 6 consecutive quarters of an increase. So that's a positive, and the management seems to indicate that the quarterly annualized attrition has fallen a lot faster. The muted number this time has been the fact that the headcount, the overall headcount, has declined by nearly 2,200 employees, the management says, and that's because we had hired 42,000 freshers so far this year, and that's the reason why the hiring has been muted. There is a special dividend as well of 67 rupees, taking the total dividend to 75 rupees. That's something the street will like. So in a nutshell, Q3 has not been as bad as what the markets were fearing, though the management is sounding a bit cautious on Europe, even as North America continues to hold up pretty well.
All right, Rima, thanks a lot for bringing us all of the details from TCS's third quarter showing. But let's also hear it out from the management on how they look at the results and their outlook going forward.
So overall, demand scenario has not changed significantly. But to be fair, it would take at least a couple of months more for us to actually know what the decision making is. We have gone into December with everybody being cautious. But our view is that this caution has different color across markets. So if you look at Europe, there is obviously a real big issue out there. And it would take some time for this caution to dissipate. And we need to be cognizant about that, and we'll see where it goes.
Seasonally speaking, this quarter we had certain furlough impact, more in Asia Pacific than in other parts of the world, but nothing special to call out. It's more or less the same that we typically face in this particular quarter. The deal momentum, the deal pipeline looks really good, and our qualified pipeline has actually gone up, okay, both in terms of medium to small deals as well as the large deal pipeline. So on that count, I have no concerns, right, where we are today with respect to the deal momentum. And at this time of the year, every year, where we are comparatively, we are feeling there's a feel-good factor about it. I don't think there is a risk to it because of the pipeline that I see, barring the uncertainties that you see and we see and what Rajesh articulated.
All right. In fact, remember, we will also be speaking with the TCS top team to discuss their Q3 numbers at 8:25 a.m. today. So you want to stay tuned for that big conversation. All right, that is on TCS, but some more important news coming in. The SEBI has released guidelines for exchanges on how to deal with outages.